Hello, and thank you for joining us for this session. I am Deepshikha Monga, an editor at DealStreetAsia, and today I'm joined by my colleagues from our research and analytics team. Valerie Law is the team lead of research,
Hello, everyone.
and Andi Haswidi is the head of Asean research.
Hi everyone, this is Andi in Jakarta.
The DealStreetAsia research and analytics team brings you in-depth reports, at least 3 a month, on the markets we cover to provide you with the data and analysis you need as decision makers. In this session, we're going to talk about deal-making trends we've seen over the first 9 months of the year in Southeast Asia, Greater China, as well as India. Let's start with Greater China and India. Valerie, how have these markets fared in the wake of the pandemic?
Overall, Greater China and India saw a healthy recovery in deal-making activities in the third quarter. Greater China saw deal-making activities recover after the threat of COVID-19 pandemic started receding in parts of the region. If you look at the funds raised, Q3 activity surpassed Q2 and Q2 surpassed Q1. In fact, Chinese startups collected a combined 14.3 billion across 354 deals in the third quarter, a surge of almost 51% in funds raised and 33% increase in deal volume over Q2. Comparing to the same quarter last year, proceeds from the recent quarter are at least 45% higher than the 9.9 billion of venture financing recorded for China. The average deal size has also increased to 45.6 million in Q3 versus 42 million in Q2. Next slide, please. Yes, and you can see median size remains unchanged. A similar story has occurred in India, whereby the third quarter saw a resurgence of deal activities after a lull period caused by the pandemic-related lockdowns in the second quarter. The amount raised across 258 deals totaled at least 3.1 billion. This was supported by the bumper month of September, where 1.88 billion worth of deals were raised. This is the highest amount raised in a single month for the year. The second highest was only seen in February, with 1.5 billion raised. While overall deal value in Q3 is more than double the deal value seen in Q2, it is only 78% of the deal value in Q1, signaling there's more room to recover. In terms of deal count, Q3 saw 258 deals, a 33% increase over the previous quarter. Average deal size more than halved in Q2 versus Q1, but it rebounded in Q3 to 70% of the Q1 average deal size. We also found that the dispersion in Q3 was towards smaller deal sizes, signaling investors' interest in diversifying across smaller companies. In terms of sectors, unsurprisingly, this pandemic has put the healthcare-related startups in the spotlight. In most of Asian regions we cover, healthcare-related startups backed funding throughout the year. In Q3 though, e-commerce platforms have been a favored sector in Greater China, grabbing 2.4 billion of funds. There were 4 mega deals, 1 medium-sized deal, and 11 smaller-sized deals worth at least 14.8 million. In the next slide for India, fintech and e-commerce shone in Q2, while edtech shone in Q3, bagging 1.1 billion, or around 1/3 of the total capital raised for the quarter. In terms of deal volume, edtech dominated too. Baiju, Eruditus, Unacademy, and Verdantu supported with their mega rounds this quarter. Back to you, Deepshikha.
Thanks, Valerie. Moving on to Southeast Asia. Andi, how did that go?
Hi. So the impact of the pandemic is definitely more delayed in Southeast Asia, perhaps 3 to 6 months, because I think most economies implemented lockdown around April. So we did not see the negative impact until the third quarter, when both deal count and deal value dropped. Overall, for the first 9 months, we saw a total deal value of 7.6 billion, which is roughly the same with last year as of November. And this means, unicorns are raising less capital this year, while seed and early stage startups continue to attract attention. So since we expect more slowdown in activity in Q4, total deal value, I think, will be either lower or on par with last year, which amounted to 8.8 billion, close to 500 deals overall. Moving on to the next slide, you can see how Singapore is actually more resilient relative to other markets in the region. So it is the only market to witness growth in both deal count and deal value in the third quarter. I think this is a testament to the city-state's role as a financial hub, as well as the government's capacity to weather the economic crisis by way of both fiscal response as well as virus containment policy. Overall, Singaporean startups have benefited from, effective governance, I would say, and will continue to do so. If you look at recovery, I think it will be a much smoother process in Singapore. Perhaps if you see this next slide, Vietnam is the most affected in terms of deal numbers in the third quarter, as well as Indonesia to a lesser extent. But overall, for these markets, I mean, when it comes to the big story of middle class expansion and foreign investment is going to continue. I think overall the fundamentals remain intact. One example of this is the 250 million fundraising by Traveloka in the third quarter. As we all know, travel and hospitality were the most affected by the pandemic, but investors remain confident on the long-term outlook, and thus they remain confident on Traveloka and Indonesia's overall travel economy. And this actually brought the overall tally for Indonesia in terms of deal value relatively on par with last year. So not too bad, considering the situation. So beyond the numbers, we also witnessed a new trend happening in the third quarter as a result of the pandemic. There were more investment going into health tech sector. As many of you know, e-commerce and fintech are usually the top two sectors in the region. So third quarter was different. It is well expected that health tech and ed tech would increase in terms of deal numbers, because everyone is going digital, working from home, and requesting telemedicine services. But we finally see the number reflecting that trend in the third quarter. That's from Southeast Asia, Deepshikha.
And let's talk a bit about fintech. That's a very hot sector, unsurprisingly, in the wake of the pandemic. And we've seen that continue to Q4. Linkaja recently backed a 100 million funding round, which was led by Grab. Facebook and PayPal invested in Gojek's financial services unit GoPay earlier this year. So there is, of course, a lot of investor interest. But as far as I understand, that's not a consistent story across the segment. It's not the same for all fintech players. Do you want to elaborate on that as well?
Yeah, for sure. For P2P, at least the story is entirely different. There is definitely demand for new loans, from consumer loans or business loans for P2P platforms, but it's really not the good time for them to be dispersing at the moment, and competition is getting tough. So this year we have witnessed, at least in Indonesia, several P2P companies, closing down operations and scaling down. We will continue to see this, I think, in 2021, perhaps merger between some of the prominent ones. And yeah, so overall for P2P, it's a challenging period, but a lot of opportunities at the same time. As I said, there will be some recovery in 2021. On the e-payment side, what's interesting is how banks are, joining the competition, and more banks, they have adopted new technologies, launched their own apps. So with Indonesia's the QRIS platform, which basically allows cross platform transactions, that would definitely be a boon for a lot of banks with limited networks. So yeah, it's going to be an interesting period at 2021 for fintech.
Sure. Thanks, Andy. So we've talked about fundraising by private companies so far. How about venture capital investors? How have they fared? Has it been particularly challenging for them, and what's the road ahead? Andy?
Okay. So I mentioned before how the impact on startups was delayed for Southeast Asia. This is different for VCs. The impact was more immediate. So deal activities slowed in the second quarter immediately, right, when after we enter lockdown. So by end of September, we only had 9 VCs that reached a final close. And this compares to 19 in the same period of 2019 and 14 in 2018. So quite a drop from 19 to just 9. But that said, while local VCs struggle, we saw great progress in C-focused funds that are raised by global VCs, as we say, or foreign VCs that are not based in Southeast Asia. So, but yeah, they do focus on the region. So in terms of these foreign VCs, we saw like 6 funds reach final close as of September. That's a big jump from just 1 from the same period last year. So overall, in terms of value, total value of funds raised by VCs as of September, it reached 1.8 billion roughly. And this was almost on par with last year, slightly up. But I do not think we will meet last year's performance, which ended at 3.2 billion. So that's a tall order. Okay. So although we saw fewer local VC funds, closing their fundraising, fund managers actually did raise much larger vehicles this time around. So 6 Singapore-based VCs contributed more than 2/3 of the total value, where B Capital, which focuses on investment in growth stage startups, was the largest. I mean, it is the largest fundraiser so far this year with 820 million. So this brings the median value for VC funds in the first 9 months to 110 million, much higher than the same period last year, which was around 65 and 55 million in 2018. So definitely more funds, big sizes, because startups are getting more mature, they need more capital, and thus Southeast Asian VCs are raising larger vehicles as a result to meet the demand, basically. So final slide on VC fundraising. In total, we have 61 Southeast Asia focused VC funds. So overall, they're aiming to raise 6.1 billion. And 22 of these funds were actually launched this year. So quite a lot, about a third of funds currently in the market is actually launched this year, unveiled this year. And so far, 27 of the 61 have reached interim close with a total value of 1.7 billion. And if we talk about just the Southeast Asia headquartered VCs, in total, there are 49 funds in the market with a target of 4.4 billion. And most of them, about 70%, are Singapore-based VCs, and only around 11 funds are from Indonesian VCs. So yeah, overall, I think it's going to be an interesting year going forward. We'll see in terms of the ability to fundraise, yeah, to be honest, it is affected by external factors as well. So we'll see how QE is gonna develop in Europe and in the EU and in the US. I think there will be some impact on the region as a result of that.
Sure, of course, investors that are focused on this region are already sitting on a lot of dry powder. So there is enough capital to invest, but everybody is becoming cautious. You know, the LPs that invest in these venture capital funds have become more cautious and selective about their investments. And as a result,
Yeah.
VCs are going to be far more selective as well. So we will see, you know, the continued momentum in deal making. However, it's going to be far more concentrated around certain outperformers than others. And of course, there will be some slowdown in deal making, at least for another quarter or so. What's the data telling you about the market per se?
One thing that has been consistent, I think, and most investors would agree, is that they have enough dry powder to invest in Southeast Asia for the next few years, and the fact that businesses that benefited from faster digitalization during the pandemic, such as edtech and health tech, will continue to attract investment. And also 2021 will be a year of measured recovery for sectors that I have mentioned before, such as travel and hospitality, mostly driven by domestic consumption rather than foreign. So we'll see all this, but the overall outlook, I guess everyone is still cautious. And if we look at our own report, that we surveyed 50 investors and we asked them about valuations for next year, the consensus is that it's not going to be much different from this year. So bear in mind that valuations in 2020 dropped by quite a lot relative to 2019. I mean, obviously the pandemic was a factor, but by the end of 2019 we were already anxious about the impact of the WeWork fiasco, as they say. So yeah, and one thing to add here is that the path to recovery will differ across markets due to a variety of factors. I mean, this is Southeast Asia. We have different governments, different consumer characteristics, but I think government policy matters most when it comes to recovery. And thus, as I said before, more confident on Singapore and Vietnam due to effective policies, maybe less so on Indonesia, but considering Indonesia's large, it is a very large market, the largest in the region. So any recovery in Indonesia would mean a lot to businesses. And I'm the least confident about Philippines because many were surprised by how the pandemic had affected Philippines, but we actually saw this coming in May, June, when we were working on the travel tech report, and we saw how much travel contributed to Philippines GDP. It's actually larger than Thailand, even though the contribution is mostly domestic rather than foreign like Thailand. But yeah, around 25% from domestic travel. So that hit Philippines a lot, apart from the the downtime from BPO. So yeah, it's going to be a challenging year for the Philippines.
Okay, thanks, Andi. What about Greater China and India, Val? And what are some of the themes that we should watch out for?
With the momentum we are seeing in the last quarter, we believe that Q4 deal activity for Greater China would finish the year strongly. In October, total funds raised by companies touched a new high this year, with an 18% month-on-month growth, indicating a strong start for the quarter. The momentum is in line with the MasterCard Caixin BVD New Economy Index shown in the next slide. This tracks the size and changes in China's nascent industries. October came in at 29.5, meaning new economy industries accounted for 29.5% of China's overall economic input activities, up from 28.9 in the previous month. For India, well, The Indian economy has been severely hit by the coronavirus pandemic and is projected to contract by a massive 10.3% this year, according to IMF's recent forecast. We have also seen deal activity slow down in October for India after the record bumper month of September, which saw several mega deals. Next year, though, India would be interesting as it is likely to bounce back strongly. IMF forecasts an impressive 8.8% growth rate in 2021, surpassing China's projected growth rate of 8.2%. Moving on, let's talk about the trends to watch in the coming year. The first trend would be health tech. The health tech usage has grown by 4 times and retained users post-lockdown, according to Economy C 2020 report. Based on our own data, as of first half this year, Singapore is the most fertile market in the region of telemedicine startups. As of the publication of our telemedicine report, the city-state is home to at least 26 companies that provide teleconsultations, of which 9 have raised at least 68.7 million of funding in total. The largest consumer market in the region, Indonesia, is home to 19 telemedicine startups. So at least 5 of them have raised funding worth 123.4 million in total. Next, we will have the theme of e-wallets fighting out in Southeast Asia. In June, when we published our e-wallet report covering Southeast Asia, we predicted that the 1.1 trillion of gross transaction value forecast for digital payments in the region a tad too conservative. In the latest Economy C report by Google, Temasek and Bain, they have upgraded total GDV for digital payments in the region to 1.2 trillion, almost double that of last year for 2025. This is revised up from 1.1 trillion they projected initially, giving us a clue about how big and fast this pie is growing. And with that, it is no wonder that dominant e-wallets in the region are in a hurry to grab as much market share as possible. As mentioned by my colleagues, there is a pending merger between Dana and Ovo, and Grab has also recently made a $100 million investment in Link Aja. All these headlines point to a hard battle ahead, as most people we spoke to told us that they usually have 2 to 3 e-wallets stored on their phones. And then the third theme would be EdTech. Well, EdTech funding has been gaining momentum, with funding tripling in 2019. Indonesian startup Ruang Guru raised 150 million in December last year, one of the largest rounds for a Southeast Asian EdTech company. This year, there were quite a number of good seed deals in the EdTech space. The notable ones being Lingo Ace that raised 7 million in June, and Manable that raised about 5 million in April. 2021 could see some of these startups move to bigger funding rounds as they move beyond simple methodologies of EdTech, such as video conferencing, to integrate more learning methodologies involving gaming, multimedia features, and student progress tracking, for example.
Thank you, Val. Thanks, Andy, for your insights. That's a wrap for this session. Thanks once again to those who joined us. We hope you have a great summit ahead. Thank you. Bye-bye.
Have a great day.
Thank you, everyone. Bye-bye.